Welcome, welcome to Forex for 40 webinar day 2. Day 2, you are all welcome, and we are sure we had an amazing day yesterday. So remember to post on your IG, on your Facebook, on your story that Forex for 40 webinar day 2 is live. So those that need to join will join in so they don't miss out. So we'll be starting very soon by 6:10. So we just want you all right now to just repost that the webinar is live. That webinar is live. So just do that. Repost the link is bit.ly/TWB YouTube. TWB in capital letter. So bit.ly/TWB in capital letter YouTube. So just do that right now and repost that the webinar is live. So we kick off by 6:10. So 6:10 we going to be kicking off. So joining. All right, welcome to our Forex for 40 webinar day 2. And Forex for 40 is actually the most patient forex training specially designed for the old. And the old, we mean the elderly ones, the adults, because most of the time forex is being taught at a very super fast pace, and most of the times we don't get to get everything about it. But right now at Forex for 40 webinar, um this is where we take our time to teach the basics and fundamentals of the forex market. So we are sure and we are concerned about you learning, okay? And it's specially designed for you. So yesterday was an awesome time. We had an awesome, and in case you missed out yesterday, just go on to our YouTube channel to check out yesterday's webinar so you don't miss out. Remember what I would always say, and remember what I would always say, which is get your pen, your book, your biro, everything, and this is actually like a course because even though it's a webinar, but you are going to learn. So just come prepared like you're in a class because you're going to learn, unlearn, and relearn. So this is a webinar from Trade with Bolu Online Services. And in case you want to check out our products, just log on to www.tradewithbolu.com, all small letters, and you would see all our services every single day about Trade with Bolu in case you are not clear about it. Okay, so we're going to be kickstarting in a while, and yesterday, remember, I told those that were on the webinar, in case you cross-checked, that you should make sure that you got the MT4 software because it's an essential software we'll be using. Okay, so it's an essential software we'll be using, and I hope by now you should have downloaded the MT4 software, MetaTrader 4 software, from your Google Play Store or your Google App Store. Okay, because it's something that we would be using in this webinar. So we are going to kickstart into yes, we say this is the most patient forex training specially designed for the old, and we are intentional about your financial freedom here at Trade with Bolu Online Service. That's why we have a perfectly designed, crafted out webinar for you. So we are going to kickstart day two, and I hope you've shared to those that you know that need to be at this webinar. So we're kicking off right now, and we're just going to be taking a look today on a continuation of yesterday. And yesterday we spoke about a lot of things. We spoke about fundamental terminology, spoke about buyers, spoke about sellers, spoke about going long, spoke about bullish. We treated a whole lot of things. And remember, I said you should just log on to bit.ly/TWB YouTube to catch up on yesterday's webinar because trust me, you don't want to miss out. So today we are going to be taking a look on what we call currency pairs, okay? And currency pairs are basically what we trade in the forex market. Remember yesterday we treated that forex market is foreign exchange markets and where people buy or sell currencies. So since we are buying currency, I'm buying a currency with another currency. So this brings about the whole concept of currency pairs in the forex market. So once you've opened your MT4, you would always see a demo account, all right, which is like defaultly set, and you would see some couple of symbols there: Euro USD, UK EUR USD, AUD USD, XA USD, GBP USD, some couple of what's all this? And those are, don't be scared because those are actually currency pairs, okay? And these currency pairs are what we trade in the forex market. So these currency pairs are what we trade, and that's why you see them like that. And the currency pairs are made up of two currencies because it's a pair. A pair is a combination of two items. So there's a base currency and there's a quote currency. And the base currency is always on the left, the quote currency is always on the right. All right. So when I have Euro USD, it means Euro. Okay, Euro is EUR, pounds is GBP. Okay, we're going to take a look at all these short words later on. So Euro USD, Euro is the base currency, USD is the quote currency. Okay, I have XAU USD. XAU is the base currency, which is gold. Then USD is actually the quote currency. So in case you are still confused, okay, on what currency, remember, just log on to www.tradewithbolu.com. We have a very free beginner course which explains all these old currencies and everything. So the one on the left is the base, the one on the right is the quote. So moving on, um and what does this quote mean? Because there are two things side by side. So what does it actually mean? So what it means is that it's actually an it means that you are buying a currency with another currency. I said that previously. So I'm buying one currency with another currency. That is what brings about the whole pair. So Beside those currency pairs, you would always see numbers. Yes, you would always see numbers. For example, you would see 1.23456. This is an example, or 1.61584. What does that number mean? It could be in short form, it could be in long form, but you'd always see numbers. Okay. So remember, I told you the one on the left is the base currency, the one on the right is the quote currency. So it means that one of the base currency is equals to that value you see there of the quote currency. For example, I see euro, USD, and I see 1.23456. What does it mean? It means that 1 euro is equals to 1.23456 USD. Very simple like that. 1 euro is equals to 1.23456 USD, and there's no two way about that. I have AUD JPY. AUD is Aussie dollar, okay, or Australian dollar. Then I have the JPY, which is the Japanese yen. So AUD JPY, I have 1.67584. What does it mean? It means that one AUD is equals to 1.67584 JPY. So that's just what those that's just the basic interpretation of those quotes there. Okay, so we move on to the next thing for in today's webinar, and we're looking at trading sessions. Okay, the forex market, even though it's opened 24/5, which we treated yesterday, it has trading sessions. Okay, and what is a trading session? A trading session is a period of time when a particular region of the market opens. Okay, a period of time when a particular region of the market opens is a trading session. Okay, so there are three basic trading sessions. We have the New York session, we have the London session, and we have the Asian session. Okay, New York is in the United States, London is in United Kingdom. I don't want to really talk that, but these are just the three basic sessions we have. In the other subsessions, we could have the Sydney session and all that, but these are the three basic sessions of we have in the trading. Okay, so moving on, we have so those three sessions are equivalent to particular time in the Nigerian time zone. Okay, for example, the Asian session is between 1 a.m. to 10 a.m. So that means when you are awake or sleeping by 1 a.m., Asian session is just opening. All right, then it closes by 10 a.m. Then London session opens by 8 a.m., closes by 5 p.m. That is almost like what we use in Nigeria because it's what we use, yes. Like, for example, most people go to work 8, come back 5. So that's just how the London session works. The New York session is from 2 p.m. to 11 p.m. Okay, because always say that sometimes New York is behind us by this, by that. So you can see that New York session opens from 2 p.m. to 11 p.m. All right, in Nigerian time. So if you look at it, it's basically just almost opened all the whole time, just between just a period of maybe 1 hour or 1 hour that you don't really see anything happen in the forex market. That's when the market is there's really no movement, but most of the time there's always a session that is opened. Okay, so you can just write it down: Asian 1 to 10 a.m., London 8 a.m. to 5 p.m. Take note of the p.m. Then New York from 2 p.m. to 11 p.m. Okay, so moving on. So Asian session, London, New York, what is all this session you are telling me about? So we are going to treat them right now, and we're looking at how does this trading session work. How does the trading session work? Okay, I have three trading sessions. How do they work? What happens between 1 to 10? What happens between 8 to 5? What happens between 2 p.m. to 11 p.m.? So how does it work? So in the Asian session, yes, it's definitely when markets within the Asian region open. Okay, you have countries like China, New Zealand, Japan, Taiwan. Yes, when all those their forex market opens. So what does that mean? That means if New Zealand market opens or Chinese market opens, that means that there's definitely going to be a movement in any currency that is related to those countries. It seems logical, right? So between 1 a.m. to 10 a.m., you mostly see movement in what we call Asian pairs, all right, or Asian currencies. So we have AUD, which is the Australian dollar. We have NZD, which is the New Zealand dollar. We have JPY, which is the Japanese yen. So between those 1 a.m. to 10 a.m., you see movements within those currencies. Okay, so just take out time to write that down right now. Asian session from 1 a.m. to 10 a.m. and I see movement between AUD, NZD, JPY. The other, but these are the three most basic fundamental currencies of within the Asian session. Okay, so take out time to write them down. And moving on to London session, which is similar to like our Nigerian work time, 8 a.m. to 5 p.m. is here we see here we see movement in London based currencies. Okay, so we see movement in currencies that okay, so let me list out these currencies. First, we have GBP is the Great Britain pound. All right, so that is your pounds. EUR is euro, and CHF is Swiss franc. And what's Swiss franc? Swiss franc is major currency of Switzerland. Yes, so it's termed CHF. It's not really so logical because you have a CHF, but it actually means Swiss franc. Okay, so most of the time between the London session, you see movement between these three currencies, GBP, EUR, and CHF. So you see major movements within 8 to 5 p.m. Okay, so we go on to the third one, which is the New York session. This session opens between 2 p.m. to 11 p.m. So 2 p.m. in the afternoon, the New York session is just opening, and you see definitely you would see movement within currencies that are based within the New York session. All right. So the New York session has USD, which is the US dollar, CAD, the Canadian dollar, and XAU is actually gold. All right. XAU is gold. You know, as you go on with time, you get to understand all these things, all these currencies, and how they really work. But XAU is gold. So you see movements within this period of time. And why would gold move fast within the XE? Because gold is closely paired to the dollar. So there's always movement in gold during that period too. All right. So between 2 p.m. to 11 p.m., I would say movement within these three currencies mostly. So does it mean that if within 1 a.m. there's no movement in US dollar, there's still, all right, there is still going to be movement. Okay, but the time that that currency is going to be most active would be within its trading session. That should be clear. The period that it will be most active would be within its trading session. Okay, that's how I say the best time to trade. Okay, the best time to trade in market generally is when the trading session overlaps. So what does it mean to overlap? It means when one session coincides with another session. That is usually the best time to trade. So let's figure out when is that time. So Asian session opens 1 a.m. to 10 a.m. and London session opens 8 a.m. to 5 p.m. That means between 8 a.m. to 10 a.m. there's an overlapping between both the Asian and London session. That is one of the best times to trade because you see movement in a lot of currencies. So what other time is the best time? Let's look again. The London sessions open 8 a.m. to 5 p.m. and New York session opens 2 p.m. to 11 p.m. So between 2 p.m. to 5 p.m. we have another two series of session open. So that is also a very good time to trade. Okay, between 2 p.m. to 5 p.m. is also an awesome time to trade. So we have two um very good times to trade between 8 to 10 and between 2 to 5. That's when you mostly see movement in the forex market. Okay, so I'm moving on to the next topic, and yes, we are going to treat types of charts. Types of charts. And in forex market, we sell and buy currencies, but we do all this on a chart. Okay, you see all these currencies being playing out on a chart. We see some couple of things green, red. What is all this? How is this making money for people? So all these are basically just charts. All right, we have three basic types of charts in the forex market. Please write this down. Okay, we have number one, the bar chart, bar chart, bar chart. Okay, number two is the candlesticks chart. Yes, like your normal candle, candlesticks chart. Okay, while the third one is the line chart, line, line charts. Okay, that's the third series of charts we're looking at. And out of these three charts, the candlestick, okay, which originated from Japan, so it's called the Japanese candlestick, is the most popular of these three charts. Why? Because it has the ability to form patterns, all right? Because the way the candlestick was work, you can skip patterns and you can understand what's really happening in the market through patterns. Okay, because patterns are a replication, okay, or an effect of behavior or thought patterns. Okay, so we see the Japanese candlestick, it can form lots of patterns. So it's really most preferred in the forex market to other charts. Some people use the other charts, but the most popular and what we are going to use at trade with Bolu is the Japanese candlestick. So we treated some forex misconceptions yesterday. Yes, last webinar yesterday. And today we have more again. Why is always this misconception? Because misconceptions always arise in a lot of things. And we just want to clear out those misconceptions. Okay? Because once obstruction is taken off, there's always a free flow of information. Yes, so that's why we are going to treat those misconceptions today. Okay, so the first one is forex is not gambling. Okay, forex is not gambling. And why is forex not gambling? Okay, I'm going to explain that. Although the market is not 100% predictable, your capital is still preserved by risk management. Okay, forex is not gambling because the way you have the bet Nigeria, I'm not going to like me, but you have all this betting and gambling. Yes, yes, you have this betting and gambling. You know, gambling is when there is no, it's kind of like a probability game. Okay, 50-50. It's going to go here or go here. 50-50. But over time, I understood why Forex is not gambling because people tell me that what if I buy and it does not buy? Is it still not 50-50? But the way Forex is that when you take out series of analysis, all right, and you do a lot of back testing and all that, the probability increases from a 50-50 to like a 70-30 because you have reasons why you are doing this. Okay, you have reasons why you are doing this. So there's much more probability. So it's not like a gambling game. You're not guessing. You understand why you are doing this. You understand why you are doing that. Okay. So that's how it is really in the forex market. And even though we can't predict the market 100%, your capital can still be preserved through risk management. And we'll touch risk management very soon through proper risk management. I've seen a lot of people come and tell me that they've blown this money, they've blown this, that. It happens, right? It happens, but through proper risk management, trust me, your capital can be preserved. Okay. So, what is risk management that we are going to be treating on today? What exactly is risk management? And risk management is a very, very wide topic, trust me. We can never stop treating on what risk management is or what risk management applies or how it works. But risk management is a very, very wide topic. And yeah, we just define it as risk management is the percentage of your account size that you choose to risk if the market goes against your position. So I enter a position, I buy a currency, but I want to risk a little part of my account. Okay, I want to risk, for example, I have $100, but in case it does not go in my favor, I only want to lose maybe $5 or $6. That is risk management. I've chosen that it's only $5 or $6 that I'm going to lose in case the market does not go in my position. So that is actually just risk management. It's the percentage of your account size that you choose to risk if the market does not go in your position. Okay, and with proper risk management, okay, if you are only risking 1% on your trade, that means you have $100, and every trade you decide to lose only $1, it means that it will take 100 trades for that your $100 to go, because you lose $1 today, $1 tomorrow, $1 the next day. That's proper risk management. So it will take 100 trades, and there's no way you can lose a whole 100 trades, because even if your village people or anybody but no, there's no way you can lose 100 trades in a row. Even if you are guessing, you're still going to win some trades. Okay, even if you are guessing, you're still going to win some trades, but there's no way you can lose 100 trades. So you can see that the major issue with many people is that they have bad risk management, or they don't pay attention to proper risk management. So that is why you hear them say they blew all their money, they blew $1,000, they blew $100 just today, and everything goes. But if they chose to risk a certain percentage of their accounts, if they chose to risk a certain percentage of their account, they would not lose everything. Okay, they would not lose everything. They would not lose everything. So, in case you've understood me to this point, I just want you to type in the comment section risk, RISK, so I know that I'm not losing anyone. I would love a feedback from team RISK in case you've understood to this point, risk management. So I write down RISK. We don't intend spending so long because we know today is festive season and we would want you to enjoy yourself. So RISK, just type in risk so I know that I'm not losing in anyone and we're following real good. Okay, okay, beautiful. That's beautiful. So, beautiful. Okay. So, moving on to what we have next, we are going to be looking at exit strategies. Okay. And why will I exit a trade? In Forex, you buy and sell currencies, but at the point you would want to exit, like you would want to not buy again. You would want to not sell again. You would not want to be doing anything again, right? So we have two major basic exit strategies. Okay, there are a couple of others because, but these are the two basic ones and the two major ones we are looking at today. So the first one is what we call a stop loss, and just from the name, stop loss, it tells them stop my loss. Very simple. So at this point, I'm losing too much. I want to stop my loss. Okay, so stop my loss. So stop my loss at $1. That's a stop loss. So you set a stop loss of $1 means that at $1, once you are down by $1, the trade automatically exits for you. So that's a stop loss. Okay. So the second one is a take profit. And what does it mean? It means that at this point, I want to take my profit. Okay, I want to take my profit. At this point, I would want to take my profit. That's a take profit. So once I buy Euro USD and it goes up, yes, at this point, I want to take my profit. Or if I buy and it's not buying, at this point, I want to stop my loss. So that's just how it is. Okay, I buy this currency. At this point, I want to take my profit. Or at this point, I want to stop my loss. Those are the two basic exit strategies. Some people could manually close, but these are the two major ones. Yes, two major exit strategies. So moving on, we have what we call pips, or which is called percentage in points. Okay, so in the forex market we have a very very basic fundamental concept called pips, pips, percentage in points. And it's just like the way the basic measurement of distance is meters, or it could be length, right? The basic measurement of time is seconds. Yes, the basic measurement of body weight or person's weight could be mass, or yes, something like that. So this the basic measurement of a movement in the forex market is what we call pips. So this is our fundamental measurement, or our unit measurement, pips. Pips. Just write down somewhere as and circle it. Pips is a unit measurement of the movement of the forex market. All right, because for example you walk a particular distance. Oh my god, I walked 2 meters today, I walked 10 meters today. So the market moves in a particular, and we say, oh my god, the market moved 2 pips today, the market moved 10 pips today, the market moved 20 pips today. So that is a unit measurement of movement in the market. Okay, that's a unit measurement of movement in the market. All right, so pips are used in calculating take profit and stop loss. Okay, we spoke about having good risk management, and what a take profit is, which means take my profit, and a stop loss means stop my loss. Yes, so when we want to calculate where would I take my profit, we use pips. Okay, so when the market has moved so and so pips, take my profit. When the market has moved so and so pips, stop my loss. Okay, so that's how it is basically. Okay, pips is the basic unit measurement of movement. So once the market has moved so pips, please take my profit. All right, so in any quote, a pips is the fifth digit counting from the left. All right, it's the fifth digit counting from the left. All right, so I would put that down, and let me get my pen. So I have 1 point, let me get that, 1.2, 3, 4, 5, 6. Okay, so I have something like this, and I'll clear that off. So the pip is the fifth digit counting from the left. So this is my left. So 1, 2, 3, 4, 5. So this is my basic measurement. This is pip. This is the pip. Okay, this is the pip we have here. All right, the fifth digit counting from the left. The number 5 is the pip. All right, this doesn't mean 5 pips, yes, but it just means this is the value of the pip. All right, to calculate the pip we are going to do some subtraction and addition basically, but this is the basic unit measurement here. All right, so we're going to explain it further with a picture we have down here. And yes, yes, the pip is simply the fifth digit. Yes, so we have 1.15382, and oh sorry, yes, that meant 5 pips. So this means 8 pips. If you count, we have 1, 2, 3, 4, 5. This is 8. 8 means 8 pips. 8 means 8 pips. Going back to my previous slide, this means 5 pips. Then here means 8 pips. Get that down. This means 8 pips. The fifth from the left is my pips. The fifth from the left is my pips. Okay, so we have pips just like you have. Remember from primary school, we had units, tens, hundred, thousand, 10,000, 100,000, and so on and so forth. So These the basic measurement. We have pips, we have pipettes, we have all that also in the forex market. So this is 8 pips, 30 pips, 500 pips, 1000 pips, 10,000 pips. So I think this should explain it better. Oh, don't worry, let me just quickly go back to explain this much more. So if the fifth one is the pip, so that means the one after is going to be tenth of a pip, right? So we have 0.2 pip. That is what 2 stands for here. 2 here stands for 0.2 pips, all right? So 8 is what we are looking for, 8 pips. So 1, 2, 3, 4, 5, 8 pips. 3 is 30 pips. 5, the number 5 here is 500 pips. 1 year, 1000 pips, then 10,000 pips. So moving on pretty fast. And remember, you may want to watch this over and over again. And remember to always be jotting down because, as I said, it's a class, but you are also learning. So we have what we call the lot size, the lot size, the lot size, the lot size. Okay. So let me look for an analogy to explain what the lot size is. Um, so the lot size is like, from the name is size, all right. You know, we explained that pips is the unit measurement. Okay, so the amount of units of that pips that are going to risk at a trade can be calculated using what we call a lot size. So the amount of units you are going to risk per trade can be calculated using the lot size. Okay, so the amount of units you stake per position or trade is what I call the lot size. Amount of units you stake by per position or per trade is what we call the lot size. Okay, then in clear terms, the bigger your lot size, the bigger your profits, but also the bigger your losses. All right, so okay, I think this is a good way to explain it. Yes, the lot size is like a multiplicative factor. I will put that like that. It's like a multiplicative factor. So I have 2 pips. Someone uses a lot size of 1. All right, so that is 1 times 2, 2. Someone uses a lot size of 10. That is 10 times 2, 20. Get is a multiplicative factor. All right, so you use a bigger lot size, you can get bigger profits, but also you can get bigger losses. Okay, such as you can get bigger profits, you can also get bigger losses. All right, and we have a table below that explains what we are looking at. And focus on the last 2 columns. Yes, please focus on the last 2 columns of it. So we have what we have the volume and the dollar per pip. We have 4 types of lots, basic lot. We have a standard lot, we have a mini lot, we have a micro lot, we have a nano lot. Remember I said lot is like a multiplicative factor. All right, so we have these 4 basic types of lots. We have the standard lot in the forex market, we have the mini lot, we have the micro lot, and we have the nano lot. All right, so for the nano lot we have um the nano lot has a volume of 0.001 and they are just risking $0.01 per pip. You know, actually you don't really need to be bothered by all this because now we have the inventions of we have the inventions of risk calculators and lot size calculators all around. So you don't really need to be bothered by all this again. Trust me. So we have a standard lot, which is 1 volume. We have a mini lot, which is a 0.1 volume. We have micro lot, which is a 0.10 volume. We have a so micro is a 0.001, and we have nano, which is a 0.001. Yes. So just take a screenshot of this. Okay, screenshot of this. So I'm going to just explain the micro and mini, all right? The micro and mini now. So what does the micro, how does the micro work like? The way the micro is, all right, the way the micro is, the way the micro lot is, we have a $0.1 movement per every pip. Yes, we have a $0.1 movement per every pip. We're super sorry for the break in transmission. Okay, just want to get the feedback, then we'll continue. Super duper sorry for the break in transmission. So we are live back, and honestly, I'm super sorry for the break in transmission. All right, you should be able to see my table screen. My table screen. You should be able to see my table screen that has the table on lots to how the lots correlate profits and losses. So we are back, and all right, so beautiful. I'm really super sorry for that breaking transmission. All right, then we have both the mini lot and the micro lot. Honestly, this is something that is quite wide, and I would advise you just take out time to research on your own. And we're coming to the last slide for today. And lot sizes really vary because your broker, which we explained yesterday, which are people that trade on your behalf, could have different series of lot sizes. All right, they could have a whole different series the way they term out their lot sizes. So brokers lot size could differ. All right, trust me, it differs a whole lot. It differs. We've seen it, I've seen it, and brokers lot sizes differ a lot. All right, so there are different brokers. We have the one for forex, we have the one for derivative, and the forex broker differs from the derivative broker, and there are basic different lot sizes also for the two of them. Right, forex there's an amount of lot sizes for different size of brokers. Yes, then there's also lot sizes for those different derivatives that we have. Okay, this is quite a very broad topic at large. Okay, so we have come to the end of today, and we don't really want to bog you with so much information. We just want to also give you time to go enjoy the holiday season. I'm super sorry for the breaking transmission. It was circumstances beyond my ability to control, but trust me, tomorrow is going to be far super better than this. Okay, so come prepared. Invite your friends, invite your enemies, invite everyone that you know needs to be here. That FFF Forex for 40 is on. Okay, because you don't want them to miss out on this amazing skill that you're learning. No, not only you should cash out in 2020, you want everyone around you to cash out. Okay, so tell everyone FFF you know is on, and they're going to have an amazing time tomorrow. Trade with Bolu online says, remember I said check out our services, and we have a professional course where we advance so much in this skill. You want to take this to become a lifetime job, lifetime skill, you should sign up for our professional course. We have the coupon code FFF, which gives you a 20% discount to 31st. Remember, I just have 6 days more. Right, that's over 720 and very few hours left. Okay, the way this December is running, you just discover that it's already 31st. So use the coupon code FFF, you get a 20% discount on all our services till on registration of the pro course till 31st of December. Okay, so this is something that Tradebolo online service has for you, and you don't want to miss out on it. Trust it, you would not want to miss out. So tomorrow again, 6 p.m. is the time. FFF day 3, and it's the grand finale. Trust me, it's going to be superb, very very much. We have something in store for you tomorrow. Could be a giveaway, could be first person to come here. Just come prepared. All right, Tradebolo online service could surprise you tomorrow, part of our Christmas holiday season giveaway. Okay, so tomorrow again, same time, 6 p.m. Bye for now. Thank you so much.